Is there a risk in the Bitcoin market? If you're interested in knowing more about this, please keep watching. You are all very welcome to join my team in WSOT. Currently, based on global rankings by the number of members, we are ranked 9th worldwide. Compared to a few days ago, we have slightly fallen back. We invite you to join our team because, according to the rules, the more members we have, the higher our chances of winning. Currently, we are the team with the most members in the Mandarin division, and were the first place team in the Mandarin division last year when the event ended. So, we warmly welcome you to join our team, as we have the best opportunity among the Mandarin teams to get a share of the prize pool. Now let's go back to the Bitcoin market. Looking at the weekly chart, we can first draw a wedge pattern. Starting from this point, when we were discussing this wedge pattern, some might have thought that it would take a while for it to materialize. However, you can observe that it has already retested the trend line. Though it has been hit on the weekly chart, there is still a slight distance on the daily chart. Let's take a look. Drawing a wedge pattern suggests that during this upward movement, there has been some exhaustion. Otherwise, the pattern wouldn't have formed. Especially if you look at both of these uptrend segments, you can see the second uptrend movement is notably smaller in terms of both distance covered and trading volume. Now, the kind of exhaustion we're experiencing, could it expand further? In other words, is there a possibility for it to expand further, break below this level, and experience a significant decline? Is it possible? Let's look at the historical price actions during significant declines or when tops were formed. Let's assess them. It's important to observe the actions during those times. This is the price action when it moves out from the top. Of course, we will analyze it in smaller time frames later. Now, let's focus on the point when the market top was formed. What were the actions observed? Let's start by analyzing the daily chart of the market. From the daily chart's perspective, let's focus on a specific area here. Here, we can observe that during the upward movement, the demand has significantly decreased, indicating that the market lacked strength during the uptrend. Eventually, as we reached the peak and started the first downtrend, it was characterized by a sharp and intense drop. Notably, the selling pressure from bears was quite evident, surpassing the previous periods of low demand during the uptrend. Now, let's analyze a specific example from the later portion. The example here is quite an obvious case. Okay, let's frame it more accurately. Comparing this segment of uptrend movement with the subsequent price decline, what did you see? Okay, the initial uptrend had very little trading volume. However, when the price dropped, it was accompanied by a massive surge in trading volume. Look here. What's the reason that after the price hits a new high point, the first downward wave tends to experience a surge in trading volume? You can observe the significant increase in trading volume here. Also, it experiences a surge of volume here. Why does this happen? Actually, this is about the action of the crypto whales selling at this point. When they sell at this level, they undoubtedly want to sell at a better price. What would be the best price for them? If we look at the entire distribution box, it would be at the highest point. So where's the peak? It's here. They would start selling from that point, which is the most favorable position for them to offload their assets at the best possible price. That's why you'll see a frenzy of selling. So I reckon that when a market top is formed, the first wave of price drop must see a significant surge in trading volume. You can observe this pattern in a few of the previous instances. The first wave of price drop always comes with a surge of volume, because it is the best price for crypto whales to offload their coins. If we look at the current market from the most pessimistic perspective, imagine we are starting a sharp decline now. This means that the segment we are currently in could be the final phase of the upward movement. After creating a new high from this point, the first wave of decline should be a significant decline with massive volume. The reason behind this is that the crypto whales, well, when the market is in a downtrend, it is expected to see them distributing their holdings. If it's a distribution, This level is where the crypto whales have the best opportunity to sell their assets. Therefore, they will sell a considerable amount at this point. You can compare the current trading volume to the previous upward movements, and you'll notice a significant decrease. The volume performance at the previous tops is entirely incomparable to the current situation. Let's move on to the second point. Moving on to the second point. If we confirm that this is indeed a distribution phase, then how should we interpret it? Hold on. We should wonder if this area is a distribution zone. The duration is too short, I reckon. Distribution after a month of oscillation won't be sufficient to reverse the trend since 15,500. It's unable to be reversed. There's only one possible distribution zone where a reversal could occur. That is by looking at the bigger picture and considering the entire white box as a distribution zone. This larger distribution box presents a real chance of a reversal. So, if we look at it as a distribution, we should focus on the entire big white box, and not just the smaller segments. The smaller ones wouldn't have any impact on reversing the trend. They might form short-term tops, but they won't reverse the current bullish trend. Let's switch to a smaller time frame chart. Let's take a look at the previous uptrend. If it's a distribution pattern, well, this distribution pattern is the one we're talking about. Then, the subsequent uptrend could likely be a false breakout. It means that this uptrend is not a genuine bullish trend. Instead, the price goes up for a market test to see if there's still buying interest. During these times, if buyers show up, the crypto whales can distribute more of their holdings. Looking at the volume below, the massive volume suggests it's not just retail behavior. For such a massive volume, if it is a false top, what happens to these chips? Buying at this level would involve significant amounts of real money. Let's do a chart review. In the past, when we've seen such false tops, for example, here, these tops were merely testing phases to gauge buying interest, especially from retail investors. For instance, for the uptrend movement at this position, you will notice that the volume tends to be quite low, since it's just a test, and there's no genuine intention to sustain the upward movement. Let's take a closer look at the final phase of the recent uptrend. The final phase of the uptrend. Here, we can observe that the trading volume has dwindled to extremely low levels. Unlike the current market condition, I believe that if we want to form a top at this point, the only possibility is that we might see another upward move from the current level, forming another top. However, during this second top formation, the volume will likely show extreme weakness during the price increase. After that, we could expect a downward movement, and during the first wave of this decline, there might be a significant spike in trading volume. Additionally, when we analyze the previous uptrends, for example, these three uptrends, they show signs of continuous exhaustion. I believe that if we are to form a top in this manner, it is more likely to happen. Based on the current market conditions, I think it's quite challenging for the current price movement to develop into the pattern we typically see before a market crash. Moreover, if we summarize previous observations of several tops and analyze their behavior, we will notice that both tops exhibited a dead cat bounce after the first sharp decline. A dead cat bounce. Okay. When the price drops, there will often be a dead cat bounce. The second wave is where the real crash happens. It's when the bullish sentiment is completely exhausted and the bears take full control. It usually occurs in the second wave of the downtrend. Before this second wave of sharp decline, there is typically a dead cat bounce. We haven't even seen the first wave of this downturn, let alone the dead cat bounce. When the dead cat bounce happens, it is actually the best time for actions such as short selling, selling spots, or exiting the market, because the dead cat bounce is relatively easier to identify. It's the easiest phase to be identified during the process of forming a market top. For example, you can see the dead cat bounce at this point, and it's usually when people make a short call or sell spots. This dead cat bounce can be easily recognized, and you can exit positions here successfully. This applies to this position and the next one. Currently, we haven't even witnessed the first wave of the downtrend, let alone the dead cat bounce. The dead cat bounce, if we were to short it, would be the ideal timing for such a move. However, we haven't seen this opportunity yet. If you're bearish, for example, if you believe this is the market top, in my overall analysis, I find it quite unreasonable to consider this as the top before a major crash. It's unreasonable unless it moves upward and creates another top. Wow! If the top satisfied the requirements I discussed, I would find it reasonable. And after the formation of a top, typically there will be a dead cat bounce. After the first wave of the downtrend, this dead cat bounce is when we should consider shorting or taking bearish positions. Currently, well, in other words, it's the ideal time to short when we see a dead cat bounce. Currently, I don't see that opportunity yet, so I haven't shorted it. I believe the real opportunity for shorting or making bearish moves will come when the dead cat bounce occurs. I reckon it has not appeared yet. Okay. Now, after explaining the topping formation, let's look at smaller time frames. We were previously looking at bigger time frames, but now let's switch to a smaller time frame, like the 4-hour chart. Okay. Looking at the 4-hour chart, we can see a wedge pattern, which actually looks quite good. Okay. As you can see, today's price action has perfectly hit the bottom of this wedge pattern. If the price breaks out from this wedge pattern here, the subsequent upward price movement could be the final leg of the upward trend, as we said, potentially leading to a new all-time high. However, we need to be cautious about potential exhaustion in this new high. However, if there is a breakout at this point, the outcome would depend on how traders react. Even if I go long, I won't allocate as much capital as I did previously because of the prolonged consolidation in this area. If we were in a strong bullish trend, it would be unnecessary to linger around here. Instead, the price could have just surged. If the market has truly finished consolidating and is ready for a healthy uptrend, the price should go straight up. Without prolonged consolidation, there might be some underlying issues with this prolonged consolidation. Now, let's take a look at the 1-hour chart. Here, you can see that the price has dropped a bit and broken the previous low point, trying to go further lower during this attempt. Alright, let's take a look. Yesterday, I didn't find it too alarming. Last night, around the 0.65 to 0.7 range, there's an important event related to CRV, which I'll cover in a detailed video for everyone. The margin closeout price for CRV is around 0.35 to 0.4. I think that if it reaches 0.4, it will be liquidated. It could trigger a wave of DeFi liquidation. The lowest price yesterday was around 0.48. Regarding the subsequent decline, I was shocked looking at it in the middle of the night. I thought we might be heading toward the liquidation price. If liquidation occurred, I believe it could trigger a wave of panic in the market. Later, we can provide a detailed explanation for you. However, I believe a major crash is unlikely at this point, considering the recent situation. But if it were to happen, I'd still be surprised as the probability is quite low. Even if a crash occurs, we might still have some upward movements, such as rebounds, dead cat bounces, and so on. Especially, the price is near an important trendline support. Please pay attention to this point. The next wave of rebounds might start from this point. Alright. Thank you. You're welcome to like and share my videos, and subscribe to my channel. Turn on the little bell button to show me your greatest support. If you're interested in trading, you are welcome to use my Bybit referral link. With just KYC verification and a $100 deposit, you'll receive a $1,000 Bitcoin contract position. It's a real position, which is withdrawable when you make profits. Also, it's a highly promoted event. The ongoing WSOT competition also offers exciting rewards. Thank you so much. Bye-bye.